Hey guys, so it's me, Nicolette Mashile, and today I want to talk a little bit about credit life insurance. Now remember that none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody who is certified and registered with the FSCA. Now I don't know if you have seen the billboards that have gone up across Gauteng that say hashtag nothing to hide. And basically I want to speak about the product that the company that put up those billboards is specifically talking about, and that is credit insurance. Now, for a lot of us, especially us who come from low-income families, this is the first type of insurance that we have ever been confronted with, but a lot of us don't actually know why the rest of us don't actually know when we've got credit life insurance. It is because it is called many things. The financial services sector has managed to take this insurance, probably one of the most diverse and one of the most easiest insurance to sell, and they've turned it into something else. And on top of that, it is a legislated insurance that one actually needs to take up when they take up some sort of credit. So basically, most of us are stuck with credit life insurance or credit insurance, debt protection, credit protection, and we don't actually know we've got it. And what actually is it? Well, let me read you, according to the National Credit Act, let me read you what it is supposed to be and what it definitely is not. So according to the National Credit Act, credit life insurance includes the cover payable in the event of a consumer's death, disability, terminal illness, unemployment, or any other insurable risk that is likely to impair the consumer's ability to earn an income or meet the obligations under the credit agreement. So you go out and you get yourself a personal loan, great stuff, you've got a personal loan, and they give you credit insurance. And basically what this means is that one day, if something is to happen to you, let's say for instance, either number one, in the unlikely event of your untimely death, you do still have some sort of credit, this credit insurance is supposed to kick in and actually pay for it. Or if you get retrenched at work and you are unemployed for a period of time, this credit insurance is supposed to kick in and actually pay for you. If something is to happen to you, you are unfortunately in an accident and you become permanently disabled and you are unable to actually make money or derive an income so that you can actually meet your credit obligations, this insurance is supposed to pay out. But a lot of us don't know it exists. And why is that? Why? For me, there's a lot that needs to go into that, because there's quite a lot of education that actually needs to go into understanding what credit insurance is. Generally, what happens with credit insurance is sometimes it is a standalone product or it's a hybrid of other products. For instance, I'll give you an example. A couple of years ago, my sister, I think I've told the story before, she had a brain surgery and her medical aid would not pay out. But luckily, her credit insurance was able to pay out and she was able to settle some of her other things. Why? Because for a period of time, she was unable to actually go to work and be able to honor her credit. Now, how many people, how many of our family members are sitting at home unemployed due to the fact that they got retrenched, imisebenzi iphelile, contracts have been terminated unduly, people have been taken to CCMA for unnecessary reasons, and they get their cars repossessed, they get their accounts put into arrears, only because they didn't actually realize that they had credit insurance. And I say this because I know for a fact that they did take up credit insurance. But this is generally what happens. A lot of credit providers, instead of discussing the credit insurance with you, they make it an added value into, not even an added value, an added product that you are supposed to take, but they don't discuss it with you. Now it's fine. Let's say that the National Credit Act says you need to actually get credit insurance. Is it then not ethical for the credit provider to then tell you that you actually have credit insurance? And once you know you've got it, can they explain to you when it's actually due to pay, in what type of circumstances, and what type of insurable risk is it going to pay out for? Because for me, it makes no sense that the whole country has credit insurance or some sort of credit insurance for debts that they've got, but they are not able to claim for it because they don't know. You can't claim from something you don't know. I always tell the story about how for the first 14 years of my life, because I'm from Bushbuckridge, for the first 14 years of my life, I didn't know cinemas existed. It wasn't a thing for me. Why? Because I lived in Bushbuckridge and we didn't have a cinema. So I could not make claim to missing going to the cinema because I had no idea that a cinema actually existed. Now that is just a small part of my life that I was not exposed to. Now imagine somebody's car coming and being taken away because they are unable to derive an income due to disability, due to terminal illness, due to being retrenched from work, or contracts similarly just disappearing. So it's important for you that when you are going to be taking some sort of credit insurance, that you ask the credit provider to actually explain to you what it actually means. And here's the other thing that they do. They actually do not tell you that they are not actually credit insurance companies. I mean, let's take, for instance, a bank. A bank, most of them, that is not their primary business. Their primary business is to ensure that they receive deposits and they give out loans and credit. So why would they go into the business of credit insurance? Shouldn't there be other companies that are doing that can give you then competitive and market-related, if I may call it that, credit insurance premiums? Here's my biggest problem with credit insurance. It doesn't have a sliding scale. And that confuses me greatly. Let's say, for instance, you take up some sort of credit. Let's say you buy a car for 300,000 Rand and they give you credit insurance and you're paying 100,000 Rand. Now, they're going on the basis that if something is to happen to you, you will have a skoloto of 300,000 Rand plus that interest that you're going to get charged. And then the credit insurance, if something is to happen to you and you cannot pay for it anymore, that needs to step in and actually pay for you, right? But what happens when you actually pay? And when you are 3, 4, 5 months away from settling your car, why is the credit insurance still 100 Rand? Shouldn't then they re-look at that and give you a fair credit insurance premium that is going to actually cover what you currently owe? Because what you owe is no longer the 300,000 Rand you borrowed. And I stand to be corrected there. So those who do know about credit insurance, please step in and let me know how this actually works, because I'm very keen to understand how it actually works. Over and above that, they don't actually explain to you how it works when it comes to a home loan. The fact that you can actually take a portion of your life insurance and use it as credit insurance, nobody tells you about that. But what they do is they push for you to get bond insurance or bond protection or bond cover that they are going to be actually facilitating. And when you take the bond cover, what it basically means is that when you actually settle your home loan, that insurance falls away. You are no longer covered. And I mean, we all know that running a house is not just about paying the loan. It's about maintaining the house. It's about paying insurance for the house. It's about paying rates. So what happens if you do die and your children are left with this house? How will they be able to pay for those things? That's why, for me, somebody needs to actually sit with you and give you a proper explanation and have nothing to hide about what it is that you actually buy, because it makes no sense that a product like this that is widely sold in South Africa, that at some level is legislated for us to actually get, has absolutely no financial education. Nobody's doing any financial education drive. And that's why we commend companies like Yalu to say, actually, you're asking a very pertinent question there. What does actually happen when you get credit insurance? How does it actually pay out? Who do you claim from? What are the things that it won't pay out for? We all know it's widely been advertised, and recently with the issues that happened with the life insurance companies, we know that non-disclosure is one of the biggest reasons why life insurance companies won't pay out. But what is the one reason or two or three main reasons as to why credit insurance will not pay out? Also, people at work are forced to take voluntary retrenchment or voluntary what? Retirement when the company is retrenching. Will my credit insurance pay out in that case? Because basically I have now been asked at work to volunteer to actually go off my job. Will it pay? If I am in an accident and it's my fault and I become temporarily disabled, will the credit insurance actually pay? These are things that we need to understand. The other thing that I need to understand is what happens if you actually default on the credit insurance. Because generally people default because they don't have money to pay. So if I default on an insurance that is supposed to help me pay on debts and I'm defaulting on everything, what will happen? Am I supposed to get the claim in just before the actual payment date is in? Because I'm just imagining, we'll get retrenched today. My debit order of my credit insurance goes off tomorrow. It doesn't go off because I don't have money, or maybe it goes off in a month. It doesn't go off. Will they not pay because I didn't claim in time? These are some of the things that I feel like we need to get somebody to actually give us education on, to give us the information, to educate us. And we need to call on financial institutions, not only from the banking space, but all financial institutions to actually give us an understanding of what credit insurance actually is. There's also a legislation that says how much credit insurance can you actually be charged. Have you ever actually sat down with your bank consultant, with your credit provider consultant, and said, is this the fair amount of credit insurance that you're supposed to give me? Now, these are questions that we need to answer. I don't know about you. I'm feeling a little done in right now that I might have credit insurance and so many things have happened to me, and unfortunately, I didn't know to claim because I didn't know any better. I didn't know any better. Currently, I'm sitting in one of the banks is debiting 4 Rand every single month from my account. Imagine if there's a million of us where they're debiting 4 Rand, because the other thing they don't do is that when you are done and you settle your debt, the credit insurance doesn't fall away automatically. Why? You know that I've stopped paying, you know that I've settled, you've given me a paid up letter. Why is the credit insurance not falling away? The onus is back on me as a consumer to come back to you and say, oh, stop the lorry. I pay Linda. I feel like as a financial services sector, we need to be a little bit more ethical when it comes to the way we treat people, our consumers. Because a well-informed and a well-educated consumer makes for a good client. And ultimately, they make for a great bottom line. So, I'm going to ask the financial services sectors to please not have anything to hide. #nothing to hide.